Hello. Welcome to today's session with Trade UFOs, the trading psychology class. My name is Reynaldo. You can get in contact with me here at reynaldo@tradictive.com. Once again, that's reynaldo@tradictive.com. Or you can go to our website at www.tradewithufos.com/Reynaldo. So before we begin, please make sure to read the following disclaimer here. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. So, welcome to today's session. In today's session, we always discuss in regards to performance, and the reason being because when you're trading to be in a peak performance state, you need three aspects of conditioning: mental conditioning, physical conditioning, and technical conditioning. Technical conditioning is simply what you know in regards to your technical skills, your technical experience, and technical knowledge. So that would be from a point of entry to a point of exit through risk management, money management, and so forth. Physical conditioning would be something about how you deal with your performance state in terms of your health, whether if you're well rested, you eat properly, whether you are physically fit, and so forth. And the reason because of the mind-body continuum, that if your body is not healthy, you get headaches, then you won't be able to focus. Of course, the major thing is the mental conditioning. Mental conditioning is simply how you deal with your internal emotions when you are trading. So, for example, majority of my trades are currencies, but nevertheless, it doesn't really matter whether if you're trading Forex or stocks or futures. But since this is FX Street and you trade currencies, there were a lot of certain events that basically happened this week. So if, say, for argument's sake, you were long yesterday, and now that the markets are basically here, it's down 0.43%, down 51 pips, then currently, if you did buy yesterday at the closing price, then you're down 51 pips. So the question is, how can you control that emotion when now that you're down and you're seeing your account into a negative? If you purchase it here at 1850, then you're still up 80 pips, basically. Now, if you didn't close your positions yesterday and now it's down 50 pips, and you would have made more than 100 and basically 30 pips, and you're giving 50 pips back, then you will have a certain emotion that you'll be feeling, right? So maybe the feeling of regret, the feeling of the shoulds, the coulds, the woulds. So that regret component is now spiraling motion of irritation, anger, or some form of a belief that you're not good enough from within, and hence it goes in a spiral motion. Now, if you can control your emotion, on the other hand, if you see things the way they are, then you will know exactly what to do. That if you made a mistake, then you will close your position and simply you will short the position. Now, if you were long, say at 1850, and now the price is dropping, then perhaps you will close your position, take whatever it is that the market's giving you through abundance, and you will move on. Either you will short a position or close a position. That's basically it. So in this sessions, we always discuss in terms of your performance basically for the week. So the first question that I'm going to ask you is simply, since Monday for the whole week, being Friday now, how will you rate your level of performance? How will you rate your level of performance? So, for example, I will rate my level of performance this week an 8 out of 10. despite I ended up negative for the week as I traded the dollar against the Canadian, US dollar against CAD. I'm still happy to say that my performance was 8 because I followed my plan. All right, so that would be myself. How about you? What is your performance for the week? What is your performance for the week? And if you would like to share, just put in your chat box for me, please. Just put in your chat box for me. All right, and then the next question that I would normally ask when I'm coaching someone, yeah, in this session is almost like a one-on-one as well, it's a group coaching session basically. So whatever experiences that you experienced this week, if you want to share, that's fantastic, and I would be able to assist you from there. So my background, by the way, I've been trading for the past 25 years. I've traded in multi-asset classes from stocks, options, futures, and Forex. So Forex, I've been educating traders for Forex now for the past 18 years. I believe that Forex has a lot of advantages when it comes to teaching. Number one is because it's 24 hours, almost 5 days a week. Number two, it's highly leveraged. So with a small amount of money, so that by putting out a big amount of money through learning, so I always tell members that $500 is more than good enough. Can you maintain consistency with $500? And talking about consistency, one of the sessions this week, we discussed about consistency. And you can see through here, see right there, what is really consistency? Well, people have different definitions, different meaning. Some of the members basically said keeping up with something, doing the same thing over and over again. And the question is, what is that something? So that something could be your recording, your journaling, your trades to see some progress. You're doing the same in terms of your methodology. You're putting the way how you're putting in your trades from an entry perspective all the way to an exit perspective, using the same methodology, following the set of rules that you have based on your methodology to enter and exit trades. And then I basically asked, who do you have to be consistent? And the group simply answered the following. Number one, you need to be meticulous. If you're going to be consistent, you need to be motivated. You need to be patient. You need to have a high level of integrity, meaning that you can follow through in terms of your rules. You need to be disciplined to follow your rules. You need to be disciplined in waking up at a certain time. You need to be committed. You need to be trustworthy, or you need to have a level of trust, and you need to be confident. And then, based on the three aspects of conditioning, is also maintaining consistency through the mental conditioning, which is now like what you're doing here today. Once a month, I have these sessions with FX Street, and then for our group, basically we have 2 times basically a month. And then I also have certain members where we do on a weekly basis just to find your level of performance. So my background as well is I used to compete at high level in Taekwondo. Been doing that for 35 years. I still compete in Brazilian Jiu-Jitsu, and I also educate or teach members self-defense and coach at Stanford University prior to the pandemic. So as an athlete and as a coach, it is really important when I'm coaching my members, my students, is to look at not just from a technical perspective, but also through a mental perspective. So Stanford has 2 to 3 coaches. Some certain businesses, what I've seen when I used to be an athlete, I also have 3 coaches. And there's a lot of, people keeping an eye on the 180 degrees that you basically can't see. So they will tell you exactly in terms of your level of technique. They will tell you in terms of your mindset, your mental game, what are things that you need to work on. So in 2000, I left work actually in 2002. I started trading in 1996. So for part-time for 6 years, basically from 1996 to 2002, and then I left work from 2002 and became a professional basically from there, and never worked in the corporate world. But through my journey, I also got my certification in NLP, which stands for Neuro Linguistic Programming. It's simply a branch of hypnotherapy, because I really got involved about the human psyche, psychology mainly, knowing more about myself, why I was inconsistent. I make money, I lose money, I make money, I lose money. So the question is why? And I really got into the human behavior. And I believe NLP is such a great tool, because we go through the root causes, because it's cause versus effect. So by going through the root cause, and those causes are mainly our beliefs and values that we have, mainly the belief system that we have based on that experience basically in the past. And then we project that, so it's an internal thing. Whatever you have in between the 6 inches of your ears will be the same effect as a result externally. So that being said, by having this type of sessions, knowing exactly what you need to look for, and then you will create a plan, which is now a solution that's on top of your trading plan, so you won't be able to do the same mistake next week. If you did it again, then mainly simply it's a lack of awareness, because belief systems, especially the limiting beliefs, are so ingrained in subconscious mind that it takes some time in order for the limiting belief to be taken out from a subconscious level. Actually, there's a really good documentary called Rewired by Dr. Joe Dispenza. So I will write it here. It's called Rewired by Dr. Joe Dispenza. Dr. Joe Dispenza is a neuroscientist and found, or through experiments through within the mind, that in order to change one's personality, in order to change a personal reality, is through the awareness of that thought. And when that awareness comes into play, a new synapse will actually be created. When a new synapse has been created, and it keeps going over and over again, and this is how you can override a limiting belief to a supporting belief. It's actually pretty neat. So that being said, there's consistency through your mental conditioning. How aware are you? How mindful are you when you're trading? 2, how consistent are you with your physical conditioning on a day-to-day basis? Do you exercise daily? Do you eat properly on a day-to-day basis so you can have good energy when you're trading? Because you need a lot of focus when you're trading, especially for day trading. Number 3, do you meditate on a daily basis? And how well rested are you on a day-to-day basis? I've never seen basically an athlete who is not well prepared prior to a competition. Mind you, when you are trading, you are always competing against somebody out there. Yes, at the end of the day, we only compete against ourselves, but remember, when there is a buyer, there's a seller. When you're buying, someone is selling. When you're selling, someone is buying. Someone is always going to win. So if you're losing, then your money is going somewhere else. Then where is it going to? It is going to someone who's winning. So whoever is out there, always remember that they are probably more hungrier than you when it comes to success. Some will be waking up earlier than you, some will be practicing, some will be reading, some will be prepared when they're trading. So the question is, how prepared are you each and every time that you're trading? Now, in consistency through your technical conditioning, how often do you practice utilizing different tools through technical analysis? Perhaps using your trend lines, defining your supply and demand, using tools such as your Fibonacci, how about your risk management skills, money management, going through the macro fundamentals. How often do you attend your classes? if you're attending classes, how often do you put in live trades? I'm a very big believer in putting live trades, in my opinion. I don't believe in demo trading because the subconscious mind knows what's real and what's not real. So that being said, if you're putting demo trades all the time, then you are not in connection, or there's no accountability because the mind knows that it's not real. So you're not going to be meticulous. You will put in trades for the sake of putting trades just to see where the direction is going to be. Well, if I put it right here and I put my stop loss, let's see. That is the normal mindset of it. But once you know exactly that if you're trading and even putting one micro lot in there, you will know that you're not connected with it emotionally, physically, technically, and spiritually. And the reason being is because every human being, and if you have money or the lack of money, you will always have the connection with money, depending on what you think, how you feel about money. So that's why I always tell members and students, when you are trading, put in live trades. When you're practicing, can you do it in a demo? Absolutely. Just to test the methodology, to test that the system or the theory really works. And if you can see that it will work, then you still have to apply it in real time to prove that whatever methodology that you're using or the theory that you're using really works in real time. It's like sports. It doesn't matter what sport that basically you do. Let's say, for example, boxing or kicking or jiu-jitsu or basketball. You need to learn how to have the skill set to punch. So someone can teach you how to punch, and you can punch the bag 1,000 times, but the bag doesn't hit back. You can kick the bag as many times as you can, but the bag doesn't hit back. The only time you can apply the punch or the kick is when you're sparring with another human being that can also kick back and punch back. The markets are the same. You're in a relationship with the markets. It will kick you back. It will punch back. So that being said, if you're only doing demo, yeah, it doesn't kick back because it's not real. But when there's another person on the other side who is also trading live, their mentality would be this: I'm going to take your money. I'm going to win, not you. So if your mindset is already saying that I can't do this is too hard, a lot of negativity, then you're already lost before even you place that trade. And that is the common challenge basically with traders. Do you know, um, actually, no, I don't have it here. I'll share with you anyway that I shared with my group. Did you know that based on, and this Forex.com is one of the biggest FX providers here in the US, and I was doing my taxes because March 15 is the due date for corporate taxes. But anyway, when you go through your Forex, and you will see there, by law, they have to post it. Here, performance of non-discretion retail Forex customer accounts for the calendar quarter ending December 31, 2020. There were 53,560 active non-discretionary trading accounts. Mind you, this is active, of which 28% were profitable and 70% were unprofitable. So if 28% are only profitable, and mind you, out of that 28%, yes, even though it's say active, but the question is, how often are they trading? Because I have a friend who's a broker, has been a broker for the past 10 years. He said, yes, it might be 28%, but some of them are not trading it. Maybe they only made one trade for that quarter, for that year, or maybe just an X amount, and they made money and that's it. But for active trading, he said that out of that 28%, maybe 3 to 5% will really be profitable. Nevertheless, we'll just take that in terms of 28%. 28% is the success rate of consistent or people who make money trading the Forex markets. Across the board, Owanda is also the same, around the 25 to 28%. Now, if that is the number, and there's a 72%, a percent that Forex traders are unsuccessful. So my question to you is, which part of that equation do you belong? On the 28% or 72%? You see, what's a challenge in trading is to maintain consistency on a monthly basis that you can make money. Can you make money 1%, 2%, or profitable each and every month? That's the most important one. That is consistency. And that consistency is based through your mindset that it doesn't matter that you may have lost one, but you would gain 3. You might have lost 3, but out of that 3, you minimize that risk properly, and you still ended up as a winner at the very end. My methodology is basically was part of my success doing my taxes. Methodology have a win to lose ratio of 76%. 76 is a phenomenal result. Disposition is about 0.6. Some of it though, in terms of still what I always constantly need to keep working is the risk management component. Because sometimes, there were times actually for the year, I have 76% success rate, but that month was a negative month. The question is why? Well, because of the risk, meaning that if there's 7 wins, 3 losses, that one or the out of those 3 losses, my loss was bigger than my gain. Meaning that on a longer period of time, I left it and simply didn't close the position fast enough. That is the key. The key is that to reduce your risk as fast as you can and let your basically winners ride. So that, other than that, how often do you practice consistency through all these variables? Recording your trades, practicing trading on a daily basis. Remember, it's been proven that it takes 10,000 hours to master a skill. Even though I've been trading more than 25 years, I've seen charts more than 30 hours, 30,000 hours, 40,000 hours. And I can just basically just automatically see whether if it's a good buy or sell. However, there's still that level of inconsistency because of the human component of it. It's so amazing because of what we call cognitive bias. Cognitive bias is simply based on your own internal perception and what you think, what you see, and what you hear that creates that belief system. So if you have that, oh, it looks like it's gonna go up, it looks like it's gonna go down. You're using your own cognitive bias. You're now being subjective. To be objective is when the market is actually talking to you. Okay, it's stabilizing itself. It's a level of uncertainty. Why is it uncertain right at this point in time? What are they waiting for? It dropped yesterday. So what is the odds that this is going to continue if it drops? However, the price is at demand. So maybe it's some manipulation. So all these things need to be taken in accord when you are analyzing to create the probability. With, mind you, with the use of your objectivity or what the market is telling you. Objectivity simply means that if the market says you gotta buy, you gotta buy. The market says you gotta sell, you gotta sell. The market says to hold, you gotta hold. Based on numbers, based on the tools given to you to create the probability. Now, if you're just doing it your own, then simply you're screwed. Because this is what's basically happening. Let me share something with you. If you do, you just simply Google trading floor. And if you look at the photos or the images here, this is the trading floor. This is what happens on a trading floor. And as long as there's a market outcry, there's going to be someone out there that is going to be manually placing a trade or will create a price at the very beginning and will be closing at the end of the day. These are the people that you're dealing with. So if you notice, do you see charts when they're buying or selling? Just look at this photo here. Okay. You do not see charts. All you see are people. So if they're not looking at charts, then what are they looking for buying and selling? Then why us as retail traders looking at charts? And the reason being is we do not have the resource nor the money to be here. Not unless you're a major institution or major bank, then no problem. You would be able to see the proper order flow of supply and demand. Other than that, you're seeing a two-dimensional chart of buying and selling that is not enough. That will give you the probability. So hence, if you're only seeing a two-dimensional chart, then you have to use your cognitive bias to create a choice from your decision-making process to buy or sell. Now, how often do you see that people are selling, or you're watching on YouTube online to buy and sell? You need this, you need that. So they're giving you a certain system that if you follow the system, you'll make money. You know what's a big thing these days is simply algorithm-based EAs that their people are selling. Why? To get rid of human emotion. Does it work? I believe it does. Certain products, basically, it does. But if you're doing it manually, then unfortunately, it takes time to really be consistent. Because if you're not practicing, you are not placing in trades, you are not journaling, then how are you supposed to know what to look for? If you do not have a coach, it's even tougher because you do not see the 180 degrees that's behind you. You only see the 180 degrees that's in front of you. Mind you, not even with the thought of being aware of your thoughts. That's based on what sometimes you think is real, but in actual fact, it is not real. Why? Because in most cases, the ego of the consciousness is the one driving you, no longer the true self from a subconscious component. Why? Because the subconscious controls you, whether you like it or not. And that's what makes it challenging. What trading, in my opinion, is a very challenging profession. It's not a get-rich-quick scheme. If you're listening to this, I'm not here to scare you, but that's just the actual fact of trading. That's why it's only 28% of active traders will be profitable based on those numbers, and 72% will be pretty unprofitable. Okay, so very important. And hence, going back through here, then it's very important to know what worked for you this week. For example, what worked for me is, patience, following my trading plan, and mind you too, though, the future, which is here, put in a new one to make it clear. Everything that you see here that is empty is pure randomness. Luckily, when you're trading based on that randomness, either it will go up, sideways, or down. That's all it will do. It will go down, it will go sideways, it will go down, or it will go up, it will go down, it will go sideways. There's only three directions in terms of randomness of what the markets can do. It doesn't matter if you're trading currency or you're trading the S&P or you're trading the VIX, you're trading gold or oil. A chart is a chart. Those randomness only goes sideways. And that's why people say, no, I only trade this. Well, it doesn't matter what you're trading. Can you read chart? Do you know price? Do you know price action? If you can understand price action in terms of how price is being utilized by institutions, then it doesn't matter what you're trading. You'll be able to trade whatever you want to trade, right? So if that would be the case, and there is always going to be here the uncertainty of events, this uncertainty of events leads to emotions negatively or positively, but mainly the negative emotion of fear because of the uncertainty component. So traders, one of the things that I've seen for the past almost 2 decades, whereas the fear of losing, that's the number one thing, fear of missing out. And that fear of losing too, by the way, is connected through either perfectionism or competitiveness. And last but not the least, the hoping, because they don't want to lose. So it connects as well with the ego of righteousness. So that being said, to be objective, trading the markets, seeing things the way they are, then you need also acceptance. So when I traded basically the dollar CAD, that when I got stopped out here after that breakout, this one's really looking good. Higher low, however, you have a lower high. I have two forces right here of buyers supporting it. And this was simply a news-based component that happened yesterday. And easy, either, remember, once something is at equilibrium, it's a 50-50, either goes up, goes down. But I already know my risk, that if I get stopped out, then so be it. And I have, basically, I took a partial position in terms of to close some of the trades. And if this price point will be maintained here, then I'm gonna buy back in and buy more with the dollar CAD. So that is my rule-based, where the major stop loss is below this low as an institutional price point. But nevertheless, part of my rules is to be disciplined. So in terms of that, patience, following my plan, and what work is my discipline. That's why I'm giving myself an 8, even though it dropped, it was a negative, it doesn't matter. And the level of acceptance, accepting the risk involved. Okay, so those are the things. And then the other question that you have to ask yourself is this: what didn't work for you this week? Well, I will tell you that there's one thing about intuition. Intuition, we always have that, our gut feel. There's a terminology, what we call human being. Human is based on your physiology of your 5 senses. The being component, which is your 6th sense, simply your intuition. So intuition can only be built through meditation. We always have this. Sometimes, because of now actually outer environment, such as media, people around, unfortunately, it will affect our energy vibration. And sometimes we have that two things that's basically fighting: the monkey mind and the true self. Monkey mind says don't do it, true self says do it. So sometimes, how do you distinguish whether if your intuition is the one talking to you, not the monkey mind? Well, when this happened, intuitively, someone is also telling me, hey, you better get out, you gotta short it because it's consolidating, the lower high will take precedence. My monkey mind said, no, stick to the plan. So that being said, that's why what didn't work for me is the intuition, because if I stuck to my intuition, I would have closed the position a little bit earlier, risk, minimizing the risk, shorting it, then I would have profited. Their break even or a little bit of a profit. So that's what didn't work for me. And that also led to some form of regret and irritation. That's the deficit of 2 in terms of the level of performance. Okay, so you need to find what didn't work for you this week. And then through there is simply cause of your problem? What is the cause of your problem? Well, simply practice and follow my level of intuition. To always listen to my gut feeling. Okay? And then the solution is to keep meditating on a daily basis. These 2 days I didn't meditate for it. Okay, so that's part of that. And then, but part of the solution is to add into the trading plan is to keep meditating. So, but one thing is simply that saved me is that the level of acceptance, accepting that risk. Then if I'm going to be okay with it, then I'm okay. All right. So by utilizing this process, hey, what is your performance for the week? What worked for you this week? What didn't work for you? Oh, I forgot here as well. What emotions did you feel this week? So that level of regret, emotion of regret, emotion of irritation basically happened. This is where I'll just move that aside. Okay. And then from there, finding the root cause. Well, the root cause is that I didn't meditate. And then the solution is to keep meditating, still practice the level of intuition, and to listen to the gut feel. All right. Any questions for me? We'll take questions from here on forwards. Please feel free to write in your chat box for me. Oh, there you are. Okay, thank you. Hi, Bijan. Sorry, I didn't see you there. Bijan, nice meeting you. No problem. You're typing the wrong box. I did the same. Didn't see it. Okay, the performance level is 6. Excellent. You found that I sleep one trade. Isn't it interesting that even with one trade, we don't sleep? It will cause an effect, cause versus effect, right? So, Bijan, based on that, what can you do now as part of your homework would be to write a plan for next week that if it happens again, what are you going to do that you're not going to slip? So the question is, what happened there, Bijan? What happened in order for you to slip with one trade? What happened, Bijan? And then basically from there, got it. So a fast moving curve. And so by you looking at the fact, by you saying, oh, okay, got it. And then did you get in for the sake of getting in or you didn't get in? See, there's only these 2 things. When something is happening, either you miss out, right? Or you got in too early or you got in too late. Because it's very similar when you get smacked. When someone slaps you, punches you, you're like, you get stunned and you're like, what the heck happened just then? And then all of a sudden, you don't know what to do in terms of the reaction. Sometimes in trading that happens as well. It's an easy win, got it. So what emotion did you experience there then, Bijan? Okay, when that happened, what emotion did you feel? Okay, and then what was the cause of that challenge or that problem? Okay, and then once you have found that, you create a solution, and part of the solution that when it happens again, you gotta put that on top of your trading plan. You see, sometimes people believe, think that in terms of trading plan, okay, I need this, my entry, my exit, my stop loss, my target point, and that's some of the traders' trading plan. But your part of your trading plan would be, okay, I need to be patient. As part of my plan for today is to be patient. Plan is to be reactive, that when it's there, then I will take it with no hesitation, and that means that I need to be confident. Part of the confidence is I need to be committed to follow through. Okay, so awesome. Very nice, Bijan, for sharing. Very good, very good. Okay. And any questions from you since we're running out of time at this point in time here? Ah, okay, got it. So you didn't get confirmation with your strategy. So it appeared a certain move for short term. Got it. That's what we call cognitive biasness there. That's a perfect example there of cognitive bias there, Bijan, where there's no confirmation, there's no clear cut. Don't worry, it happens to everybody, including myself. And then the part of expectation, the anticipation, we anticipate something. Anticipation rather than reacting, right? Reacting is objective, anticipation is subjective. Cool. Very nice. All right, so I'm going to end this session here. Thank you so much, guys, for coming in. I know we're running out. I think I went 1 minute over time. Oh, it's have more discipline. Perfect. Excellent. Good. So please do the process. This is a really good process right here. And if you have any questions, my email address is at reynaldo@tradictive.com. I'm more than happy to answer any questions that you may have with your trading based on a mental conditioning part. And if you need to know more, please visit our website at tradewithufos.com/Reynaldo. We also have different classes, not just from a psychology perspective. We have classes in Forex, futures, and options. Actually, sorry, and even stocks, actually. He posts his clips somewhere. So Bijan, FX Street has all the recordings, and you can basically go through our channel through there to rewatch basically the clip. No problem, no worries. All right, guys. Well, thank you so much for coming in. I greatly appreciate it. And thank you for your time. Take care until next time. Happy trading. Bye, guys.